Welcome to the Jazz video for Friday. It's the edition where Dustin and I sit here, and it's supposed to be us chatting. Hey, Dustin. Oh, wait, that's right. That video was going to look like this.
Let's figure out the exact number. The data is the data, so let's go with it.
Yeah, and so we decided that it's not going to work. Technology didn't play in our favor, but I got a good one for you. Hey, it's Eric with Jazz Wealth Managers, where we don't just invest the dough. We like to educate you on the dough. So the big question for 2023 is, where are you putting your money? Your retirement money, how are you allocating that? What is the best fund to buy? Now, I've done a video, Dustin's done a video on sectors where you could look at the lowest performing sector right this second coming out of 2022. Technology got hit very bad in 2022. So maybe you say, hey, you know what? I'm going to dump a bunch of money in there. But the problem is really comes down to looking at historicals and what's been the best performing long term, because yes, technology can come back. How long will it take to recover? Who knows? So it's a bit of a dice roll if you just go out there and you say, hey, I'm going to just buy the worst performing sector and go with that only. Instead, I want to show you something. But before I do that, I want to explain first that you have to understand what large cap, mid cap, and small cap stocks are. Because when you're out investing, Robert Kiyosaki once said that, just buy small cap stocks because those are the best performing. I'm going to challenge that a bit, Robert, on that. But then also you have all kinds of different people saying other things, such as, Dave Ramsey talks about buying, 4 different mutual funds. And it's like, what is best for you and your dough? And so with a large cap fund, what you're looking at is between a market value of 10 billion and 200 billion. That's large cap stocks. Then if you're looking at mid cap stocks, mid cap is between 2 billion and 10 billion. And then small cap stocks are 250 billion in market value to 2 billion. So what you got, 250 million to 2 billion is small cap, if I said that right. So what you have to understand is, you're looking at this. Your large cap stocks oftentimes are larger companies, oftentimes much more stable. Sometimes are paying a dividend. Mid cap are middle of the road. They're still growing. There's a lot of growth there. And then small caps are more of your big opportunity to win big. That's what Robert Kiyosaki talked about, the rich dad, poor dad guy, if you don't know who I'm talking about. But that's just kind of a baseline. So then now let's look at really where you should put the dough. And so if we're looking at this, here's a chart from JP Morgan. It's an asset class return chart. This is 2008 through 2022. Looking at this right here, this is why I wanted to break down the different, large, mid, and small caps to get you to understand. You also have emerging equity markets. Looking at 2017, check that out, 37.8%. I remember a bunch of people saying, hey, I'm making a lot of money, putting all this money in, emerging markets in 2017 and making the money. The problem is if you look at the chart, as far as everything goes, it hasn't done that well historically. So if you're looking here, if you come down, if you can see in the annual returns right here, emerging markets, so emerging equity, your overall return right there is 1%. This just goes to show you that yes, you can have one great year, but the problem is trying to cherry pick is dangerous. So not doing that as much in 2023, but instead going for more of a diversified portfolio. If you were looking at the total chart, instead of looking at, well, hey, you know what? I'm going to invest in this because it was down this year. Well, last year, most everything was down. Instead, looking at diversifying a bit more, your best bet based on this chart from JP Morgan, just say, because I didn't put this together, they put this together. Your annualized return, best return from 2008 to 2022 was large cap stocks, and that was 8.8%. That was your best. Your volume, if you look here, what's interesting is REITs, which real estate investment trusts, anything that you're investing in within real estate, actually took most of the top performing through 2008 to 2022, but it actually was only the third best when it came to actual annual performance. So if you're looking at, oh, well, this one did the best in 1 year, just because it did the best in certain years does not mean that it does the best long term. I really am just wanting to show you this, to break this down for you, to explain the idea of diversification, because you could sit there and you could try to take the one-shot wonder and bet on one sector or bet on one thing, but there comes with a lot of risk and play. Large cap, honestly, has been the best performing from 2008 to 2022. If you're just buying into something, buy into those stable companies. Think through that. But then from there, as Robert Kiyosaki talks about, small cap, really, I mean, look here, 7.2%. So it wasn't the best bet from 2008 to 2022. So just goes to show you, diversify, because at different times, especially in a retirement portfolio, what you have to realize is if you have large caps that are performing better in a year, maybe we take from that, and you, in that bucket of money, that's what you're actually pulling from for your retirement income. Versus, let's just say that part of your bucket is, let's go here. Let's say we have a little bit of emerging markets. So maybe you have some emerging markets and it has a horrible year. Well, then you don't pull from that bucket, because then you're selling low. We always talk about selling high, don't sell low, keep that money and let it come back. And so think through this. This is just to give you a good breakdown there of asset allocation, making sure that you are putting your dough in the right place to work for you.
Thanks for watching. If you want to watch more FinTips videos, click here. Be sure to like and subscribe also.